light. Smith's in the black. Hey, Rob.
Morning, how's it going?
Morning.
Morning.
All right, guys, everyone can hear us. Eric's blog this morning was obviously about Dubai and the situation over there. You know, what was the billion? 59 billion?
59
That they want to
estimated.
Yeah, estimated that they want to extend out. The banks were HSBC and Royal Bank of Scotland.
Among others, I mean,
Yeah.
those are the main ones.
Those are probably the main ones. I'm sure there's a lot involved. I mean, it just has to do with the world economy. They stopped work at one of their largest projects last year. It was a year ago. They stopped 200-foot skyscraper, 200-story skyscraper. As far as this goes, this is going to lead into the recovery in Europe, I guess, first, with those banks being hit the most, or have to make decisions on how they're going to do this, how they're going to rewrite their loans.
Well, the other issue here too is the government, or the United Arab Emirates government, basically going to bail out the whole thing. And at this point, they're saying it'll be on a case-by-case basis.
Okay.
But no one really knows exactly what's going to happen.
Well, I mean, they could look. I mean, if they wanted to, I guess they could look towards, you know, a blueprint of kind of what we did. I guess in a little different. You know, it's a smaller area, but they have one of the largest populations, right?
Yeah. No, it's very concentrated.
Concentrated. Okay. So obviously that's something we got to look at, guys. You know, we were talking about this morning. I don't know if this is even relevant, but you look at something like AIG. I mean, do they have exposure to those loans? I have no idea. I don't know, but you know, it's down a dollar. They could. I'm sure a lot of companies could.
And no one knows.
No one knows.
And GM specifically came out in your statement saying they had no exposure to it. That's why if you notice LBS is down fractionally. Due to other news, but GM's not.
I mean, to me, this just shows that this whole world, this economic rebound, so to speak, you know, isn't as far along as maybe some people think. It's, you know, it's going to take longer, and there's going to be other hiccups in the road. We were also talking about maybe a dollar recovery because of this. Maybe people fleeing back to you know, the safety of the U.S. government. You know, it's just something to watch, something to be concentrate on. As far as trading, it's kind of a tough trading environment. You know, around these holidays. I wasn't in Friday, but there was obviously it was a thin market. It would have been probably without that news. It would have been even thinner. It would have been, you know. So it's a tough trading environment. You're gonna hear this news flow about Dubai probably all day. They're gonna be talking about it. A lot of it is old news, so don't think you can trade on it immediately. It has to be digested. It's just a little tougher situation than, like, say, a month ago, or with earnings out and all that kind of stuff. Rob Smith, you have anything for us today?
Yeah, when you look at Friday's action, I mean, what I wrote about in the black, at least partially, was trying to figure out, you know, on the close, we came in quite a bit in the financials, and just trying to decipher what those kind of signals are giving us. That in the past, we would have seen, you know, by about 10 or 11, we were looking at maybe coming back and going unchanged, because that's just how this market has been, but we didn't do that. And so, yeah, with the AIG, we don't know if there's exposure, but that was something we were watching because of the tight volume demand condition there, for it to pick a direction. And it appears that it's trying to pick a direction south. Unfortunately, you can't short it, but I'm looking at other like HIG and your BBT. They have tight bands that are trying to break lower. Oil recovered, as far as looking at the USO, it recovered on Friday. And it's softening up a little bit here, and if that softens up that sector, we're really starting to lose our leadership. And the other chance that would be for the market to recover would be tech. And I wrote about that in the black today, that a lot of those names have really tightened up here and are trying to pick a direction. What that also means is that we could get chopped up here a little bit, might get a little bit whippy. Like you said, old news might be seen as new news and then fade. So, yeah, it's going to be tough here. I'm probably gonna hold off a little bit until I can see things take a better direction.
Okay.
Actually, I just want to add one thing to what Rob's saying, though. He's right, financials did sell off notably into the close. Like Goldman Sachs went down just 2 points, JP Morgan went down 50 cents. But it's worth noting almost all those stocks gained back that ground already. Like Goldman right now is trading at 164.5 or 165.5. JP Morgan's back up 40 cents. And big cap tech is actually higher, probably on retail sales from Friday, and who knows exactly what. And Amazon's up $1, Apple's up $1. Right
I'm
now.
looking at Apple still holding over this 200 level, which
Yeah.
is a big level for it to hold.
Yeah.
And
But
then
the
I'm
day
look-
traders, though, my point is, it's just noting the big cap techs and financials are up this morning.
And I'm looking at this, the financial bull, the last 10 minutes of the day, it seems, on Friday, it
Yeah.
just fell out of bed, it
Right.
fell $2.
That's what we're saying.
Yeah.
But it's right back this morning.
Yeah, it's back up a buck. Is Frank there?
Yes, he is.
Frank, you want to say anything?
Yeah, on Thursday, the VIX traded below 20. It traded like 1985, and it traded up above around 26 on Friday. And it traded from 26 down to 23, and then back up to 24.75 at the end of the day. So the volatility is back, definitely, which is nice.
Okay.
Goldman has acted horribly prior to Friday. And we're at 165.50 up $1.34, but there's a gap from 169 down to 166.5. So as long as Goldman stays below 166.5, I think that'd be something to watch. Chicago PMI comes out at 945. I think you're going to see a little bit of a whipping market here. It's going to be oil's down a little bit. Dollar is weaker by a little bit. The bonds are weaker. I think the biggest thing that came out is that Iran is rattling sabers about putting in a lot of nuclear power plants.
Yeah.
That came out over the weekend. And Abu Dhabi is going to cover Dubai. But it doesn't mean they're not going to punish foreign banks a little bit and give them 80 cents on the dollar instead of 100, or try to renegotiate terms.
I kind of agree with that, Frank. And what I see going to the end of the year without this Dubai news, I see people just thinking this market was going to, rally or continue to rally. But now with this hiccup in the market, you might got some players stuck in some trades that they were buying into the end of the year. But I agree, it's going to be a whippy market. And they probably will make those banks suffer. Why shouldn't they? I mean, they just get a much better deal for themselves.
And they were talking today when on my way in on commercial real estate loans. You know, that's the next. TD Bank's got $20 billion worth of commercial real estate loans, and they're all coming. They have to be all renegotiated. So that's what we're facing in the first quarter.
Yeah.
That'll be coming. That'll be news in the next couple of weeks also.
All right, guys.
Every sell-off we've had has come to a dead stop, and we've rallied back towards highs. I think this next sell-off, you watch for it to really roll.
Yeah.
And instead of shorts getting caught, like shorts are waiting for the market to roll over and then entering. I think at some point the market's going to roll over, the shorts are going to enter, and then they're going to press, and they're going to be right
Yeah.
with the move the market's had. Maybe we don't get that till the first of the year. I don't know.
Yeah, and then maybe, if you're a buyer,
But I think, you know what I was thinking? The key is watching this VIX. Because now the VIX is very much in touch with where the market is going. So I think that if you watch the VIX, it'll be very helpful.
Okay. How do you, one more time for everyone, how do you specifically watch the VIX? What do you watch? What do you
I
watch?
watch the chart and I watch dollar VIX on Shirley.
Dollar VIX.
Right.
Okay.
My composite chart, my composite number doesn't come up on Eric's thing, so I just change it every day to dollar VIX. And if you can't get a chart on it, you can just watch it that way.
Okay.
But it's all over the place. It's good to watch.
All right, guys.
It's also pointed at Friday. If you watched it Friday, it opened at its high and it pointed to the market rally. So you wouldn't even be looking at short side. You'd just be looking at, in those big gaps you saw Friday, you'd be taking offers even though there was gaps, because VIX was headed straight down after the opening, and then it rallied towards the close.
All right, guys, so
Kind of VIX.
so when you hear Frank talk about the VIX, just so you know, if